Good morning and welcome to Equity Story Trade Watch. Today is the 14th of December, Wednesday, and I'm joined here by Claude. And Trade Watch is all about talking about announcements, maybe some stories that happen overnight. So we recap and possibly find some interesting information for you guys. Join us. Let's go through it. Before I do that, I just quickly go through the disclaimer in front of you. As per usual, we always just talk about, in general nature, about the stories themselves and possibly the technicals to go with them. All right, Claude, we had not a bad last night reaction to that CPI numbers that came out of the US, and I think they fell below the expectation, which is nice. However, it's still pretty elevated. It's still pretty, out there. But there was a little bit of cheer from the market, which kind of points to what the Fed might do, which I think they talked about. If the inflation is starting to look like a little bit more under control, they're going to drop to 0.775 raises to 0.5 raises, which I think now is close to, I think, rating about 75% chance of that happening, which I think also saw the overall possible rises to the interest rates to, I think, the cap, we run it in 5. So that's where the consensus currently is at. Not bad, at least for our point of view. The market's settled down a little slightly overnight with that sort of information. Whether that happens is another story, but I think tomorrow will be another interesting day with the interest rates, of course, out of Fed. Well, I'm happy at the end of the day, because what I saw is gold go up as a result. So that's nice for the gold stocks to start to move a little bit, and it's over $1,800 again. So hopefully we can make some money on that. But also it gives us an opportunity to have a look at some of the stories that maybe are high risk, but might have a little bit more interest from the the tech space or something like that we've been looking at, maybe a little bit more expensive, a little bit more risky. I've got a few announcements to go through before I talk to you, Claude. So if I can just run through the 3 stories that I want to chat to, and that is the material space. So first of all, before I do that, I am going to change the screen so you can see, guys, what I'm looking at. So just give me a moment and I'll go to the charting side. And the 3 came out with announcements this morning. And let's have a look at the charts and we'll go through those announcements right now. So I'm going to click on that.
Sounds good.
All right, and get rid of that. And we've got the first one was SXG. So this gold play, right? It is an interesting gold play because they come up with an incredible hit of about 300 meters of about 2 grams per ton of gold. That's, in terms of gold hits, that is pretty bloody good, right? Overall. However, of course, we know as this sort of type exploration results and then sort of building into maybe a resource, hard to replicate. They can be hit and miss. So we wanted to see more of that. And of course, the market probably wanted to see more of that. They've come up with more results today. Definitely not as good as what we've seen previously. There were some high grade hits, but much, much thinner. So for me, probably not good enough to follow up what they had at 300 meters. At least they cashed up. At least the gold price going up. So they're probably going to be holding on. So that's the chart, looking at it right now. We had a bit of a bounce today, which is not bad. So the daily chart looks pretty good. Would I be probably touching this on this announcement? No, I wouldn't. Would I be still in it trading wise? Possibly, because of course, if you look at the daily, it looks pretty good. So it's still okay. And the gold's going up. So you never know, they could come up with another release in the next couple of days. You just never know with these things. So that's why I'd be looking at the charts. Weekly, also, if you look at it, if I'm going to look at it, well, let's go to 1 year, you can see it's not bad, right? It's still holding on, still holding at the top. So maybe I'd have, if I was trading this, if I was in this, I'd be looking at maybe a 70 cents, 75 cents maybe as my stop. So maybe something below, so like 73, maybe I'd be looking to start selling out. Watch it, not for me. There's probably other better stocks out there at the moment. None of those results anyway. So that's that one. Next one we talked about, and I know we're looking at copper plays, Claude, and I know you were looking at some copper plays. We want to find something else, alternative to SFR, which don't have much in there, was RXM, which was touted as one of the bigger resources we've got in Australia, undeveloped resource, and a lot of analysts like that deposit. However, it's been around for ages, right? So from my experience, I've seen it. They've tried to develop many times before, but unfortunately falling at the last hurdle. And the reason why, it is not a cheap project. Almost $1 billion in capex, right? Which is not easy to find. Second of all, the costs this is a large project. This is a large project. It's got a lot of copper in there, almost 2 million tons of copper. So it actually is a big project Australia-wide, right? However, the actual economics are not that brilliant. That's the problem with this project. So you've got a high capex, high costs as well. When I looked at it, it's not cheap at all. So for me, I don't know. I mean, I think that today's announcement actually probably spooked a few investors out there, because they're looking, I'm thinking, holy moly, we need a high copper price for this project to work. So I don't know. I mean, I'm sort of caught in two minds. I'm looking for the next thing. I thought maybe we can play this, but not on today's reaction. That doesn't look great at all. So for me, I think
that's good to know.
Yeah, I think I'm going to go pass. Let's find something else, or maybe just trend it if it's trending. But
well,
maybe copper price.
I think it's also important not to if you really want to find the right copper play, but you can't find it, it's important not to just be like, I'll take the best thing I can find. It's like, right? Probably got to look for something that you're happy with, rather than just, something that's almost what you want to invest in.
I completely agree. Don't force yourself to buy stuff that, because you need to have something in your portfolio that's with copper or whatever, you might be trading. I mean, and that's probably the silliest thing you can possibly do. Just stay away. Wait for the next opportunity somewhere else that might come around.
You can't pat all the fluffy dogs.
No, you can't. Now, unfortunately, this is playing up on me, but I'm looking at the next announcement, and that's for the Patriots Battery Metals, right? There's not of a chart anyway, because it's been around for about a week anyway, right? So from that point of view, the chart's like all over the shop. It started to go up to $1.80, went down and back to under $1. So maybe it doesn't matter if I can't show you the chart, and I'll get it working in a second while we'll talk about another stock. But the results today, this is what you're looking for, right? If you're looking for an explorer or a developer, this is a sort of exploration stuff you want to see. And they were spectacular today. This is one out of Canada that's only just listed. And the high grade and thickness of the actual drilling is, up there with some of the best that I've seen that probably are producing at the moment. So if you're looking for a lithium play, and I know lithium at the moment is a little bit, under the weather and looking a little bit sick on the back of the Goldman Sachs report recently. But if you're looking for a trade, maybe somewhere along the line, Patriot Metal is definitely the best I've seen exploration-wise globally, right? Because it's in Canada. So PMT .asx is the one that's the code for it. Now, like I said, I apologize, I can't put it on for you, but
while you have a look at the charts, there was actually one company that I was having a look at. Peter, did you look at BET yesterday when it put out its announcement?
No, I didn't. So maybe if you want to talk about it, you go for it.
Yeah, I'll talk it through for listeners. I don't know if anyone on the call has shares in bet makers, but it really did have a remarkable query from the ASX just yesterday, saying that it's a weird situation where the company decided they were going to pay $15 million to a shareholder who also has done work for the company, $15 million in order for him to agree to escrow his 100% of his shares for 3 years. So, and that's instead of 50 to 65% of his shares. So it would appear to be that they're paying $15 million to a guy so he doesn't sell his shares, which is super bizarre. Never seen that before. And then not only that, but the ASX put it in a letter to bet makers. Intelligence received by the ASX, they said, which suggests that at BET's AGM in 22nd of November, the CEO made comments to the effect that the business rationale behind granting additional consideration of $15 million to Mr. Tripp was because it was more than a strategic deal and because Matt has helped me personally. Now, of course, the company in its response, I'm assuming, is not agreeing with that. So they say they don't accurately reflect Todd Buckingham's statements, and they mischaracterize the business rationale behind the payment. And yeah, it seems like a little bit of a quagmire there, but they're basically saying that the trip payment was not related to the escrow, which was incorrect. So at the AGM, the CEO made a statement that the trip payment was not related to the escrow. For the avoidance of doubt, the company confirms that this statement was incorrect. So that right there is, a huge red flag for me. This stock is just completely off the investable list for me forever and a day now, basically. That's an incorrect statement that they're admitting that the CEO made at the AGM regarding this bizarre $15 million payment, which in itself is probably a separate red flag.
Yeah, look, I when I read it yesterday, I was just shaking my head in disbelief how they can do that. And like, that's normal. Type of stuff, which is ridiculous. Anyway, look, the less spoken about it, the better. I reckon. I agree with you. Uninvestable, and I would not be touching this with a 6-foot pole. Yeah, so pass. And anyway, look, with those sort of betting type companies, they're dime a dozen out there, and they
virtually never make a profit.
Yeah, exactly. They have to spend so much money just to acquire customers, and oh my god, I mean, I remember PointsBet as well. Remember the one in America? It's just another one of those, oh my god, headache type companies. So for me, maybe a trade here and there for the high risk takers, but fundamentally, no. All right. Apologies for the unfortunate, you see a blank screen, but I can't get it going. It's just Reuters just decided to go kaput on this. I've got nothing for you even. Anyway,
maybe I can screen share.
No, that's okay. Look, I've done the three charts that I needed to do. The other two stocks I want to quickly talk about, and I know you want to talk another stock, so you can ask me a question about it in a second. But T&E, basically, we've had the ex-founder, who I think is not even part of because he's quit the chairmanship recently as well. Just sold some shares. I mean, substantial amount. He had about over 5%. He's at about 13.50, I think, somewhere around there. But at least the share price hasn't tanked, which is good. So from that point of view, I'm not too fast with him selling. He's not part of that team anymore. I'd be more worried the CEO started selling. So, but from there, it's probably moving on to something else, bigger and better, other things that he wants to do.
Though it is probably worth noting that there were earlier in the month a couple of actual director sales that were much smaller.
Fair enough, and that's probably you probably want to take profits, and he'd had a good run anyway, so you can imagine going, probably topping out at around 14. You already maybe take a profit here at the same time. Unless maybe you're a long-term holder, you don't give a rats for the short-term type stuff.
I'd be taking a profit here because we've got three people that there are three different I guess like insiders, if you still count the substantial holder as an insider. I don't know if you would, but if you do, there's probably a bit of profit taking from people that could understand the business quite well. So to me, that would be definitely like a signal to take a little bit of profit. Not saying I would like throw out the thesis though or anything like that.
Yeah, I agree. Last one I want to quickly chat is CGF. We talked about it yesterday because there's someone had brought it up and go, look at this chart. It look bloody good. I wish I could show you, but I can't. So anyway, CGF had a really interesting move up. And now we're thinking, what's going on here? Is it insurance? Is it something else? I thought maybe it was insurance, but this morning I was just reading the AFR and they're talking about that one of the private equity firms has now topped up the stake to 19%, which suggests possibly that they are looking at CGF as maybe an acquisition target at some point in time. Now, of course, that's probably the result why it's spiked up on the back of that. And watch this space. You just never know what's going to happen. There might be some things behind the scenes we don't know about yet. So from that point of view, good luck to you. But I think, generally speaking, Claude, if I saw that sort of spike on the back of 19% thing, and maybe I'll take a profit here with such a big thing, because it's it's a company that it's not my type of thing, and you don't see that sort of big moves. So maybe there's a case to make to go, well, maybe I'll take a profit here on the back of this sort of spike.
I think that would be reasonable. Yeah, I mean, you wouldn't want to sell it all right before a potential takeover offer does come,
Exactly.
but there's no guarantee that that's going to happen, and it could well
No.
just drop back. Could just be a long-term holding for them, a long-term play.
Yeah, agree. All right. Now, I've done all this morning's announcements. Is there anything else you want to chat about?
Well, we can't look at the chart, but I was interested to hear your thoughts on, Supply Networks, SNL, a stock that we both own. I had covered that recently as part of my recent article on 5 stocks with positive AGM updates. So I'm sure you're across the positive commentary there, but I just wanted to get a feel for how you're thinking about valuation, essentially, because look, I took a fairly conservative approach of taking the low end of their profit after tax guidance of 12 to 12.5 million. If you take the low end of that, and say, because they have said, they're not expecting much growth in the second half, by the way, as their expenses go up in terms of their expansion plans. So let's just say they make 24 million in the full year, which is probably a touch. You could argue it's conservative, but that's what I'd be going with. That would be 20% profit growth, and then an FY 2023 earnings rate, PE ratio of about 21.5. And I just wanted to expose that thinking to you and see what you think about that idea. And then also, is the concern there, I guess where I landed was, it's a good company and I love it, but is 21, 22 times 2023 earnings, is that attractive enough to buy? Should I consider topping up? It's way above my previous buy valuations, put it that way. I'm not going to sell because I have a small holding. I think it's a good quality business and it probably can sustain this current valuation, but I don't see, I can't argue it's undervalued right now as much as I like it.
A great question. And like you said, I mean, we both like it. I own it in the funds. And I think possibly because it's such a light traded stock, I'm happy to be patient with this. You only need is one seller to drop it back to say 11, 10 bucks again, really, when you think about it. And it is a little bit expensive for me as well, I have to admit. I probably would like to own a little bit more of it because I love the company's management, how they've actually done such a great job with this company.
Yeah, I agree. It's been a sleeper one, and it's taken me too long to realize that this is a really got that honest, competent management that you want.
Exactly. And those sort of management teams you should be celebrating and owning a lot of type stuff.
Yeah, exactly.
Many of them around on the ASX. So I'm very attracted to this company. I like it, and whenever I get a chance, and I have to be honest, I've been nibbling at around 10, right? That's my sort of where I've been putting my little bids on, around 10 bucks. I've picked some up, but lately, of course, it's been now 11, 12 bucks, somewhere around there. But do I have to possibly increase my offer? I'm going to probably wait till February to see how they report. And like you said,
cash flow is important for these guys as well, of course, right? Because their cash flow could be well below their profit.
Yeah, and this is why I think I'm prepared to wait for February, because if they slightly, maybe, the market is expecting something good, maybe it's just slightly below that and it gives it a bit of a down thing, this is the time to pick them up, I think, because it's, at the end of the day, they will have their ups and downs, but generally speaking, they've been over the last 5 to 10 years, they've been excellent business and they've really delivered in a lot of different ways.
I'm kicking myself. I didn't buy when they fell down to $6 in, not $6, beg your pardon, when they fell down in June, I think it was, down to $9.
Yep.
That the thing is, I was trying to, I had basically a valuation under that, and I just didn't get there, and 9 turned out to be as good as it kind of gets, really.
Yeah, look, like I said, at the end of the day, just stagger. I think for me anyway, as an investor, I stagger my buys anyway over time. So I'll get it in lots. Sometimes I'll get, unfortunately, it'll be more expensive than I think. And sometimes I'll get it cheaper than I thought I'll get it. So it averages out over a period of time I'm buying. So,
it's just painful. I mean, 3 years ago, this was $4. Like,
it is. But the thing is this, you can't sort of smack yourself around going, I missed it at $9 or whatever, you were thinking of.
Yeah.
You like it, you buy some, and then you just keep buying it until, you're happy with whatever you're holding. As long as you don't chase it, because like I said, this is a lightly traded stock, and you can move the share price quite significantly up and down. So look, I like it
one
overall.
To buy on the down days, then I reckon, if nothing else, we can conclude that.
So, when you see a big, maybe, I don't know, 10% down, don't be scared of it. It actually takes an opportunity to get it.
Yeah, fair. All right. Well, thanks for that, Peter. Look, we're on the same page there. I guess part of me wanted you to be like, oh, it's still a buy. But no, I think you're right. Probably best to just be patient.
Yeah, I think so. Look, you're only a couple of months away anyway, right, from buying. So we'll see. If they come up with a great result, you have to be buying at 14.
Yeah. I think
that's right.
It'll probably just be like they could, of course, beat guidance. Let's see what happens. They say they're humming along at the moment, and they're sort of forecasting it's going to be a bit worse in the second half. We can't keep this up, so you could be just buying the peak of their performance if you bought right now. That's one risk too.
Yeah, it's exactly right. And the thing is, you just don't know how the market is going to react on February. So
I think one thing that I can say, having followed it, is I think it's definitely a follow-worthy stock. Like, you could definitely just have a long-term approach to this one.
I agree, because they've already demonstrated that, right? They've got a track record where you can go, hey, these guys obviously have done a great job. And I remember a few companies like that. Like I said, there's not many of them around.
If you can get it for like 15 times earning, you can buy with confidence.
Exactly. This is what I'm saying. That I don't mind paying a little bit more for really great competent management that can actually drive the share price over the next 20 years, right? Well, maybe I'm pushing it.
Yeah. Well, it's like, at least, distribution networks can get stronger over time. So I like the story. All right. Well, thank you for that, Peter.
Yeah, thank you for asking the question. Now, is there anything else? Because we're struggling with no Reuters, can't even show you any other bloody charts. Maybe we'll call it a day.
Yeah, I think that's all I got at the moment.
Fair enough. And we'll get together again. Me and Dave will get it again, and hopefully everything will be working tomorrow. But apologies for the non-Reuters that gave up the ghost straight away into our charting. Have a great day, everyone. Like I said, we'll speak to you again tomorrow. Thanks, Claude.
Enjoy the summer, guys. Thanks a lot, everyone. Bye.
Bye.